going on, everybody? I wanted to make this video today because I want to show you guys my method to finding the biggest possible trades in the markets. Now, if you guys follow me closely, you know that I pretty much just trade NAS 100. However, this is a method that really works across the board regardless of what you're trading, but the main things that I've really used this on have been indices and even things like gold. So we're going to show some examples for NAS and also for gold, and it's a concept called key levels. Now, I've made videos in the past and I talk about it, but I just really want to highlight and explain the reasoning why we want to look for key levels if we're trying to catch the big swings, right? Because at the end of the day, there's going to be a lot of moves that you can catch on a daily basis, especially if you're a scalper or intraday trader. But sometimes people ask like, hey, how can I continue to hold my trades for an increased risk to reward ratio? How can I, have the confidence to hold a position that's doing really well and just try to squeeze as much profit out of it as possible? Now, all of that is going to, again, depend if you're scalping, swinging, intraday, how tight your stop loss is, right? All these different factors. But if we are trading with pivot points, right? If we're trading at these key levels where big decisions are being made, right? That is where we can catch the absolute biggest monster moves in the market, right? So let's actually, show you, right? Because that is how we're going to be able to build on this and actually, take opportunities in the future. And I wanted to make this video specifically today because for NAS 100, we're actually sitting at this 19,500 key level again at the time of this recording, which is just at the last couple hours before market close on Friday the 13th here in September 2024. And we've extensively talked about 19,500 over the several weeks leading up to today, multiple times that we could have capitalized off of this 19,500 area. Within the private mentorship that I run on akashx, we do Sunday market outlook calls. We do post them here on YouTube. And then as I do my live sessions, I've kind of, explained the reasoning why we were selling below 19,500 just a few weeks ago, like at the start of September. And you saw how that went, right? So 19,500 has been something that I've been talking about nonstop over the past like couple of weeks, even a month at this point. Not only is 19,500 one of the key levels that I'm showing you here today, but it's also a very clean psychological whole number as well. We can really make a whole concept on that maybe in a future video here. If you guys would love to see that, obviously, drop it in the comments if you guys would love to see a psychology video around whole numbers. They definitely do play a part, especially in the indices. But just from key level understanding alone, we can see that 19,500 really back in June, mid-June is when we started really seeing that level being tested. And that created this initial push. We ended up revisiting that level back in the end of June, almost about 10 days later, respecting once again. And that led to this big rally to basically all-time highs for NAS 100 at around that 20,800 price point. From there, we obviously saw a very strong push to the downside and another reaction around 19,500. This is towards the last week of July. Came up, made a small move, right? And that's when we finally started breaking to the downside below 19,500. So kind of starting again from scratch, what I really love to see is number one, starting on the higher time frames. If you guys notice, this chart is a 4-hour chart for NAS 100. Yes, you can find sub key levels on smaller time frames such as the 15-minute, 5-minute, etc. But those are going to be for your daily moves or smaller sized trades. But if we really want to catch the strong big moves in the markets, we're going to want to scale up to at minimum an hour time frame. I think the 4 hours is a very good medium between the daily and the 1 hour, where we can kind of swing from there, but also, have enough data to where we're not, holding for a very, very, very long time either, right? I think it's just a really good sweet spot to be at for these key levels. So one thing that we love to see is once we are reacting to that key level, where does price go? Because that really is going to tell us what we can expect price to do once we revisit that level again, right? So for example, again, we started, seeing 19,500 being respected at this point, and where did it get to? It got to this blue dot. I have it marked up here, right? That is the high that it formed above 19.5 before we ended up retracing and revisiting 19.5. Now, once we revisited 19.5 and we started getting that push away again, where did this stop? It stopped all the way at these all-time highs again that are marked off by this second blue dot. So all of these dots that I have on the chart are basically showing me once we broke above 19.5, where did we get to? We got to here, we got to here, and then we got to here. So I'll actually mark that one off as well. We always want to see once we bounce off 19.5, where do we go? Okay. Now, if we notice, it's not just for the buy opportunities, but also we want to look at sell opportunities. So once we broke below 19.5, which happened here, this was towards the end of July, we saw that price ran all the way until this point before coming back up and revisiting 19.5. Once it revisited and broke lower again, we got all the way to this low at 17,265 roughly, right? And then over the last several weeks, we saw that again, we started breaking below 19.5 over here, and that led us to all the way 18,340. This was about a week ago, right? About a week ago, we got down to here. So now we are clearly seeing we are back at 19.5, which is, again, why is this such a relevant video right now? This is exactly why. So by the time we upload this, hopefully for the YouTube audience, you guys can implement this information, whether you're a part of the private mentorship program or not, and hopefully, take a good trade out of this or whatever the case may be. Even if you're just learning from this, that's a W in itself, right? But for those that are inquiring about the private mentorship program, you guys can find all the links in the description of this video. If you guys want to connect with me privately, get started with akashx, you guys obviously can check out what all of that entails. But it is really the most exclusive way to basically trade hands-on with me, with my Liberty strategy, and also just learn all of these concepts that I talk about on YouTube for free a lot more in depth. And I think that's really the details that are going to take you to the next level. Now, where are we going to go from this 19,500 level again? What I start to look for, guys, simply put, is, are we looking at a fake out or a true push, right? And so right now, we're basically closing on Friday bullish, right? Slightly above 19.5. So my initial bias right now is that we can continue to push bullish. However, we've seen this done in the past where price tried to come up above 19.5 back at the end of July, and that did not last very long. In fact, it led to a very strong push back to the downside that, resulted in this huge low. And if you guys recall, this big push to the downside here was when we had that whole flash crash that, some of the, even the other country stock markets were collapsing. It became a whole conversation about the world finances like just coming to an end, right? That was that push right here. We started seeing those talks kind of resurface over the last couple of weeks again. So 19.5 is just so pivotal because this is really going to be that area where we're either going to get into like recession talks or we're going to be like, okay, we're good. We're pushing back to all-time highs. I truly believe that this is going to be that medium ground between those two types of conversations, right? And so if that's the case, you can see why the big move is to be caught right now at this level, right? Now, there's other concepts that I'll look at, such as areas of supply and demand. As you guys can kind of see on my chart here, I have this demand zone marked off here, a clear wick to the downside, clear manipulation that ended up pushing price higher to where we're currently at right now. I know that we definitely capitalized off of that with the Liberty strategy, breaking out of the Asia high that day. But we haven't revisited that point. So my initial reaction is, yes, we're pushing above 19.5. But at the end of the day, I still feel that there's some unfinished business to the downside, at least for now, where we can expect price to maybe fake to the upside and then return back to this 18,860 level. And then from there, it would be very interesting to see if we kind of react back up or if we end up breaking through and continuing lower, to these really low lows that happened a while back. So that's some of the analysis that I've been doing, obviously for the students in akashx. But 19.5 again is just that major key level where we want to take that decision. So there's other smaller time frame confirmations and things depending on your strategy. If you guys trade smart money concepts, supply and demand, maybe some of you just trade pure trend lines. I'm never one to judge how people want to trade as long as it's something that makes sense to you and that you're profitable with, right? But at least based off of the Liberty strategy and what I look for, I will definitely look for some type of ranges during Asia to form, get some type of fake out action and really execute some nice sells there so that we can take us down to that demand level. But these type of big trades where we can probably expect, out of a setup like that, at least a 5R, 6R, even a potential like 10R plus trade play out if we get all of those conditions met, right, to take us here. But that's not possible if we don't have, those very strong levels to trade off of. And then obviously if we have some fundamentals like high impact news or something like that that can push us forward, then, that can just speed things up. But I don't really like to trade much outside of key levels and expect big moves, right? Because sometimes, we'll try to trade, for example, last week we had this really choppy price action here. And we're nowhere near a key level at this point. In fact, we're like halfway through a final move that ended all the way over here from that key level at 19.5. So when we trade in the middle here, you can see how you can get a lot of liquidity grabs, a lot of fake outs, a lot of stop hunts. It's not the same type of conditions that you can find yourself in when you are trading at a key level where we know, hey, historically, if we're breaking below that, we're due for a big momentum day. And this was a trade that was revised with the students here where we could see breaking this low of the range with 19.5 also breaking. It was just A+ superstar setup that ran for a huge gain. I'm talking thousands of pips, over a 10R plus type of opportunity with just that one trading day. But it's because of that key level, right? Now that's NASDAQ, that's my bread and butter, but can we start to do this on other assets, right? Let's look at gold. With gold, again, I don't really actively trade this much, but we do talk about it on the Sunday market outlooks, and we can see how beautiful gold has been respecting key levels over the past several weeks. I believe on one of the recorded sessions for Sunday Market Outlook that should be here on YouTube, you guys will see us discussing this key level of 2480 from a while back and how we got multiple rejections to the upside from that point that led to these huge type of buy scenarios here. And I mean, it's self-explanatory, right? I mean, if we just visually see how price respects that as a high, right? That is what key levels are all about. Where has price visited to time and time again? And also you can see I'm on the 4-hour time frame. I really do believe that's a really strong sweet spot for identifying these levels. If you like intraday to intra-week trading, where we can hold a position for maybe a day, a couple of days, etc. So 2480 was huge for gold, absolutely, as you guys can see here. And then we also formed another key level once we started reacting off of that here at 25.26, 25.27, give or take, right? Again, self-explanatory. We can see all of this price action just kind of respecting the highs. Some people will call this support and resistance. That's fine. You guys can use the terminology that makes sense for you. I just say key level because I don't like to label it as, oh, it's resistance, we're selling. Oh, it's support, we're buying, right? We don't know how it's going to react above or below that. We just know that it is a key level because of how price has revisited that specific number multiple times and is respecting it, right? So in general, if we push above a key level, like we did here, we can see how price respects it and goes for buys, right? Same thing here. If price is rejecting, you can go for sells. But look at the overall trend as well, guys. That's going to be my last tip for this video, is when you're looking at key levels, don't just treat it as like support and resistance, right? But also look at it from what is the momentum and the overall trend, right? We can clearly see gold has been bullish, right? Especially in times of uncertainty during an election year. We have, a lot of kind of negative news as far as the stock market and the state of America right now, with the dollar not doing so hot, etc. Right? So you can see that gold is bullish. From a fundamental perspective, from a technical analysis perspective, we've just been forming higher lows and higher highs. So yes, can we sell, for example, below these key levels? Absolutely, and there was opportunity to do that from a scalper to maybe intraday perspective some of these days. But from a, hey, I want to hold a position and squeeze a lot out of it, the buys were definitely the stronger trades to be taking, to be buying from this point, allowing it to stack once we start breaking out of these highs as well. And we can clearly see we are in like all-time high, crazy bullish territory right now for gold. So this level still remains very strong as far as like if price starts to come back down, right? We know now at this point of 27.28, 27.30, rough, or I'm sorry, 25.28, that if we start to respect that level, we can expect buys off of it. If we start to actually break below that, then we know that we can sell off of that and take it to the next key level here at 24.80 once again. So this is really like a cheat code, like a GPS for knowing which direction we should be taking, what type of bias we should be having when we're trading. And then if you guys have your other list of confirmations or whatever the case is to execute your entries, then that's where you want to kind of integrate that. But just from a daily bias of direction and where are the hottest zones to catch the biggest moves, without a doubt, key levels, whether you're trading gold, whether you're trading the stock market, it is the way to go if you want to catch the monster move. So hope this video helped you guys. Hope you catch a monster trade. I will be looking for these NAS trades, so hopefully we get something on that. And I hope that you guys can capitalize on maybe a move like this. At the end of the day, guys, I'm not a licensed financial advisor, and none of the stuff I ever talk on my videos about is financial advice. But this is just my opinion of what I've found to be pretty useful in my personal trading, and I think that you guys can find some value in it as well. But please make sure to like, comment, subscribe to the channel. We've just passed the 300 subs mark, so appreciate everybody who has contributed to that. I already know this channel is on the way to impacting thousands and thousands of people, but it won't happen without you. So shout out to you for being one of the early subs on this channel, and I got much love for you guys. So we'll see you on the next video, and let's run it up.